Okay, let's go through another trade that happened yesterday. So this trade, again, very, very simple. And again, it just in line with everything that we look for and how price kind of accumulates and distributes throughout our daily cycle. Okay, so as you can see, again, we took out the Asia session high, then we came back to take out the low. And then when we took out that low, we had a 5 minute demand that then led us into trying to trade into the supply area. Okay, it didn't quite happen that same day, as you can see. Okay, this is like 1830, which is 630. And then again, you get an Asia session range. And then as price has now done its thing, again, we've induced to the high side again. Okay, haven't quite reached that 10 to 1. Okay, but you can see what price is doing. Again, once you understand these cycles and you understand what price needs to do, then you can actually take the trade. So let's backwards engineer this and let's come into this area here. And then let's go into the 5 minute. Okay, so again, you're going to see price opening like this. So again, the first thing you need to do, step one, you're going to identify the previous low of the day, which was here. Okay, this was the low of the previous day, and this was the highest point, okay, of the previous day. Also, I mean, if you're including Asia session in there also, but again, just coming out of Asia session, I always include these kind of pricing. But you can look at this or this. Either way, you know, price should be attracted to this area. So when we're looking at this, first things you'll do in the morning is again, you mark out your gaps. Okay, so we already know that's a IPA area. Okay, we know this is the highest point of the day because this is Asia session range. Okay, so as we know, Asia session kicks in, well, 11 p.m. UK time. Okay, so this is the highest price of that day. Okay, the new day kicking in here. So we know this is the highest price of that day. So we already know that's one target. Okay, and if we just clone this, okay, then we've got target two here also. So you've got three targets in mind. So you've got IPA, you've got this previous daily high, and you got that previous daily high there. So again, once you identify those, okay, you can now do your thing. So you're like, all right, cool. We know that's a target. So again, I'll just stretch that out. We know this is a target. Boom. Okay, we know this is a target. Boom. So again, you've got three targets to the upside where you're like, all right, cool. If we do take out the low, okay, if we do take out the low, then I can target this area. Okay, so you identify the high sides, target one, IPA on the 5 minute, target two, target three, and then obviously you got target four, which is the ultimate high right there. So you've got big high areas where you can target. So now we've done the highs. What we're looking for at the bottom, okay, we're looking for what's at the low. Okay, so when we're looking at the low now, okay, so again, Asia session range, okay, we create this area, we've got this demand candle on the 5 minute, and then nothing else. And then we know this is the previous day's low. So we now got this as a inducement target, okay, to the low side. So again, we know we've got two areas now that we could potentially be interested in. So again, this is the medium inducement, previous day's low. Okay, so that'll be the medium inducement. We've got this gap in here. So again, let's be very precise. So again, we can do this. Okay, let me just borrow this and then we'll make this smaller. And then we know we've got this gap in this area also. So we've got this IPA slash FVG area. Okay, so we know we've got price attracted to this area again. It's just the same thing over and over again. So we know why we've got our entry in this area right here. Okay, because we've got this gap and this 5 minute candle. So again, when you're watching the previous videos, it's just the same entry technique all the time, just understanding structure. So now we've created a picture in our minds. We know what's happening above. Okay, we know what targets we have above and we know what targets we've got below. Either this is going to be mitigation or we're going to take out this low and then start reversing to then come out for this liquidity. So either this liquidity point of the previous low or a mitigation, one of those two. So we've identified everything we want to see for the day. We understand exactly what we need to look for. So now as the day plays on, let's see how price plays. Okay, so again, on the 5 minute, we've now induced the high. There's no mitigations except for IPA areas over here. Okay, for us to start thinking, yeah, let's sell it to come all the way down. There's none of that happening. So we just have to wait for price to give us a sign that we can actually take a sell or potentially a buy. So again, we could see price doing this thing. We've now kicked into London session, okay, 8 a.m. Okay, we've now kicked into London session. Okay, price is still doing its thing, still going higher. Again, there's literally no signs to start telling you to start selling. So again, if anything, you'll be looking for some buys. Again, we have this gap that was created here. Price ticks into that. We take out this high. So if you wanted to get in here on a 1 minute, I can see there's a 1 minute entry here. Then you can start taking that towards these areas. So again, there's no signs right now that you should be selling. Okay, price is still doing this thing. Then all of a sudden, okay, price starts breaking down. So now you're looking at this thinking, can we start selling in this area? Because we've now taken out the internal range. Okay, there's a little external range here. So now you're looking at this area thinking, can this be a supply candle? Is it the best trade in the world? No. Okay, but we start to see signs because what's actually happening? We start creating trend lines. Trend line starts to get taken out. Again, you see the sad face there. Okay, we create the supply in there. Okay, you see the supply. Okay, boom, we've got that supply in there. And then you've got the breaker structures. So now you know, cool, we've got this gap in here also. So you can play the 50% gap, or you can play this candle right here. So again, it's going to be a low risk trade if you wanted to do that. Again, it's not the best trade in the world, but these are the only kind of trades you should be looking at when price is doing what it needs to do. So again, you can make it a 10 point stop. Okay, you can make it 10 point stop, and then you just target again previous low, make it a 10 to 1, 3 to 1, whatever you want to do. Okay, but the ultimate target is down here. So if you wanted to do something like that, you can. But again, like I said, we have no mitigations to these sides until here. So this is a very risky trade if you wanted to do something like that. Okay, sometimes is it worth the chance? Yes. Okay, does it work? Yeah. Okay, it does on that occasion. Boom. So now you've got price doing exactly what you want it to do. Okay. Now we can see this gap right here. Okay, price playing out. Okay, gap in here, and then boom, 4 o'clock, you get your entry, and now what you're targeting? Now you're targeting your 10 to 1 type of trade. So again, if we just go into the 15 minutes just to speed things up. So again, you understood what we was looking for in the beginning stages, right? Okay, high there. Okay, we already understood there's a gap to be filled here, high here, high here, high here. Mitigation, should I say, over here. Plus, again, another gap. Okay, it's just the market doing the same thing over and over and over again. Once you start to understand that, you start to understand exactly how you should now interact with the market and how you should target specific pricing. Okay, it's just the same thing that's happening over and over and over again. This is literally how the market moves. So once you understand these cycles, then you can start trading exactly like this. So again, we already had one trade for the day, which was a sell into our mitigation point, and then you had a buy here, okay, to now target these highs and then potentially into the next 15-minute mitigation point. So again, you start seeing exactly how that accumulates. So now we're in Asia session range. So again, you've got this trade here that was a 17 to 1. Okay, so let's just call it 180 pips here. Now you're targeting a 10 to 1. Okay, like I say, my 10 to 1s are always based on the specific stop loss. So if I have a 30 pip stop loss, my 10 to 1 would be 300 pips. Okay, if I had a 10 pip stop loss here, okay, my 10 to 1 will literally just be 100. Okay, 100 points. Okay, but obviously we already knew what was targeting down here. So again, you get a 17 to 1 / 18 to 1 trade. So again, just like that, you build bias from the day, understanding what you're doing. And then coming into the new day, you can see again where we start reaching. So this is where price currently is, but already know what we're targeting. Okay, this high right here from the previous day. Okay, and then this high also right here, which will be again a medium inducement for the day. And then we already know we've got our cycle highs through here on the 15-minute for mitigation, and we've got this gap right there as well. So again, you can start seeing why we're now trading towards these areas and understanding that we want these kind of buys. Okay, so once you start trading like this and you start seeing a sequence happen time and time again, you can now start trading with confidence, even if you do lose, because you will lose. Okay, as much as you can get trades in and out. Again, we already understand this is why we trade the way we trade, because we've got very low risk, very high reward. So again, you can adjust your lot sizes accordingly based on how many what your stop loss is, and then go from there. So as you can see, the new day is now kicked in, and what's the ultimate target since the previous day? Okay, we'll be coming back into the supply area or this IPA, and then taking that liquidity, and then mitigation in there. So again, very, very simple breakdown. Again, just follow the steps, and then you start to see these things happening time and time again. And it's just the same thing over and over and over again. Okay, so I hope that's been insightful. Hope that's been a good video for you just to understand exactly what you should be doing and exactly how you could enter and what you should be looking for reversals and then your entry.